a very special guest. Aditya Suresh, Managing Director, Head of India Research at Macquarie Capital, joins us right now on the show. Aditya, great having you. As always, thanks for taking the time out. And Aditya, tell me if I got it wrong, but I got a hint that the tone and texture of the note that you recently wrote a day ago seemed a lot more constructive than what you may have been for a better part of this year. Is that fair assessment?
Yeah, good morning, Neeraj. And yes, there has been a shift. And I think, yes, the tone has kind of turned a little bit more positive from our side. Now, just in terms of contextualizing that note again and kind of the framework, just taking you back in time a little bit, was that the concerns which we had going into 25 were around earnings, what is already kind of in expectations, point one. Consumption, as you know, has been kind of really weak. Foreigners have been selling. So these type of aspects, right? And even in terms of the on the supply side, you could see a lot of this kind of primary activity, which is at least in our mind problematic. The domestic liquidity, a lot more is going to these thematic kind of funds. So those are some of the aspects, right? But I think through the year, what is really kind of played out is that we have seen earnings cuts across the board, right? Across sectors, which have kind of come through. So forward expectations at the start of the year too high, and across sectors we've seen that moderation in consensus estimates. Because of that, what had happened was that from a broader emerging markets perspective, for most of say 25, what we've seen is that typically India's growth premium to emerging markets is about say 500 basis points, like 2 year forward. That had shrunk to basically zero, right? So we're trading at this kind of high multiple despite this no growth premium. Where we are today, Neeraj, and that I guess the main point of the note was that we do feel on a bottom-up basis that this entire kind of process of cuts is largely now done. And therefore, to the extent that India were to actually deliver on, let's say, a mid-teens kind of pace of growth, and some of the other parts of emerging markets are going to see, who had seen kind of a big kind of bump up in earnings expectations due to cyclical aspects, that does not kind of play out, then our growth premium starts to re-emerge, which wasn't the case for the past 12 months. And that, I guess, is a specific point which keeps us excited here, or the reason for the pivot. And in turn, I guess the dynamic that you're thinking about is, one is this growth premium starting to re-emerge, point one. And because that foreigners coming back to the market, whether it be because of that growth premium or even if it be just that India as a beta to global markets now say 0.4, right? So maybe just as a hedge, we see some inflows as well. And also kind of the other piece on foreign flows is that when you think about fund flows to market cap, more as a technical aspect, that's now, whenever you've been at these levels, we've seen a fairly meaningful bounce. So I guess the broad theme, I guess we should be thinking about is that earnings growth coming back and then growth premium kind of starting to re-emerge. Foreigners kind of coming back to India as a market, domestic liquidity remaining supportive. And a combination of those three aspects is the reason for that pivot towards a more optimistic stance on the outlook for India as a market.
It's a dramatic change from when we last spoke, Aditya. Hi, Tamanna here. And, you've entailed the reasons quite clearly. One of the things in your note that really struck is that the base case for the Nifty now shifts to 30,000 at the end of 2026, by the end of 2026. What do you think powers that move, or which are the spaces that you think power that move?
So we don't really call out a specific target here, Tamanna, on any of these indices, but the broader theme was that we're feeling more optimistic that we go towards that kind of level in the next, say, 12 months. In terms of the what gets us there, for us, it's still a very bottom-up driven answer, rather than it being saying that it's going to be driven by, say, financials or consumer discretionary. I don't think it's more than that. I think it's still going to be more bottom-up driven. So when you think about some of the larger companies, we're optimistic on, say, Reliance. We're optimistic on, say, a Bharti Airtel and the outlook there. We're optimistic on, say, an HDFC Bank. And so it is going to be fairly specific bottom-up kind of ideas. But we're feeling more optimistic on the path here incrementally.
Hi, Aditya, Alex here. And I was looking at your note as well. So 152 companies that are in your coverage and 40% beat, 40% miss. So therefore, glass half full is the way that I'm reading it. And you've described that you're more optimistic. But I'm just wondering, you've seen companies on a blended basis miss your revenue estimates. So I'm wondering whether you are shifting your forecast for the second half higher in any pockets. And you've described also the sectors that you anticipate will continue to outperform and those that you think will lag. But on a blended basis, what is your expectation for the second half? And does it move up materially in the next financial year?
Morning, Alex. So I think the broader theme, first to take away, is that when you look at the first half and the prints in itself, when you look at revenue growth for, let's say, MSCI India, which is a broader kind of list of 160 stocks, revenue growth in itself was about, say, 5-6%, right? So if you look at trailing 12 months year on year. Underneath that, you had seen margin erosion. So PAT growth was underneath that 5%, right? So I think the first thing just acknowledge is that the first half was pretty soft. And that's kind of excluding all these kind of one-off kind of items. The point though, and in response to that weak print in the first half in the past couple of quarters, forward expectations, which I think is a more relevant metric rather than being just second half. So what we tend to look at quite closely is how rolling 2-year forward expectations are moving across the different sectors. But in response to the kind of weak numbers in the past few quarters, we have seen meaningful cuts to forward expectations across these different sectors. And so the real crux of the kind of the message is that we're feeling more optimistic in terms of where the forward expectations now sit. That wasn't the case, say, 12 months back. And where forward expectations now sit still points to an aggregate sense about a 15% kind of growth for India as a market over the next, say couple of years, which would be a meaningful premium to emerging markets to the extent that some of these kind of cyclical kind of recovery in earnings does not kind of play out.
Aditya,
So I would still think about the 2-year forward,
Yeah.
not the second half in itself here.
Okay, a 2-year forward. Okay, that brings more clarity. Now, of course, in that report, you've mentioned, buckets of stocks that you find interesting. I want to talk about, and you have the bottom-up best ideas. I want to talk about your rising stars: Tata Communications, Make My Trip, Lemon Tree, LTTS, Delivery, Aditya Birla Capital. What have been the reasons for choosing some of these?
Look, so our bottom-up ideas, again, so we call this the Super Sixes. But we have these 3 categories, right? We have a core list of 6 ideas, a tactical list, and then the Rising Stars list. The Rising Stars list is where we think these are stocks which have a credible path towards doubling on a, say 2 to 3 year perspective for fundamental reasons, right? Now, one of the themes, Tamanna, which you'll kind of see across those 3 buckets is that there is no obvious theme or sector conclusion, right? So it's very specific bottom-up ideas. There's no commonality, if I may, in the investment theses for these companies. So it's really specific and bottom-up, right? So for example, in the case of Make My Trip, it's more about you're dominant in that online travel space. It's a good thematic. There's growth, returns, free cash flow for the platform. And we think the multiple is cheap. So therefore, that's a Make My Trip. That's also kind of a proxy on that entire kind of consumer discretionary thematic as well. Delivery, in contrast, is a very different dynamic, right? So delivery is more about these guys are in third-party logistics. We do think that there is a very strong consolidation opportunity here, which could help delivery's kind of economics. They've already kind of consolidated market share towards about 50% of what goes to third-party logistics, with that further expands. Tata Communications, on the other hand, is a completely different story, right? So that's a story about, so think about this as, this is a digital backbone, right, for our entire kind of India enterprise data kind of story. So when you hear about any data center announcements, so for example, when Brookfield and Reliance speak about their data center project, or Google speaks about the data center project, you need the plumbing, right? And so think of TCOM as the digital plumbing for that entire ecosystem. So whether it be connecting data centers, servicing kind of enterprises with large and growing kind of data requirements, as enterprise kind of expand their footprint as well, all that TCOM is at the intersection of that, right? Plus, they have some other things going on, which I think is really interesting in terms of their cloud business. But again, so just within those 3 stocks as well, there is no commonality. So specific bottom-up Tamanna was kind of the main point.
So that's an interesting point that you've highlighted, that there's no one theme. It's very specific. And those, of course, are the bottom-up ideas that Macquarie is talking about. Aditya, thank you so much for giving us the time. Always a pleasure speaking with you, and hope to catch up with you soon.